Hello traders, Gary Wagner here. Approximately 12:30 in Honolulu, 6:30 in New York on Tuesday, 10th day of October 2023, and this is the Daily Report for Gold and Silver. Although gold opened and closed with a differential of about 10 cents, opening at 1875.40 and closing at 1875.30, it did create a doji and gained approximately $11 on the day. It is currently trading in Australia, down $2.20 from the New York close, and is currently fixed at $1,873.70. Obviously, there is still concern about the conflict in Israel, which is highly supportive of gold. And the other thing is a genuine decline in the dollar itself. We are looking at a daily chart, but it is a three-line break chart. When we convert it to a candlestick chart, what you will see is we have now seen a solid decline from these highs just above 107 to current pricing that closed roughly at 105.55. One of the better ways to determine the strength of the current sell-off in the dollar and whether or not it will become a full-blown correction is to view it through a Heikin-Ashi chart, which is what I have put up on the screen. The difference between a Heikin-Ashi and a standard Japanese candlestick is how the open is fixed. A candlestick chart uses a true open, while a Heikin-Ashi fixes the open from the midpoint of the prior day. Body size is good, and there is no upper wick, which means, according to this study, that the downtrend in the dollar is still intact. On a technical basis, the next support level, should it continue to move lower, is 105.18 to 102.92, the 23.6 and 38.2 Fibonacci retracements. We did send out a trade alert this morning recommending that you raise your stop. Your stop should have been raised from the original stop at $1,839 to $1,857.50, roughly at our entry price. We're putting it below the real body of yesterday as well as this low that came in today. We are looking for more upside in gold, but we want to protect in case there is any downside. Just as we did with the dollar, we converted our daily candlestick chart in gold to a Heikin-Ashi chart. You can see that this represents trading overseas now. This is really today's candle, which was a doji when we looked at it through a standard Japanese candlestick chart. This Japanese chart style clearly takes the noise out of the market. No longer are we seeing the gap that occurred, but rather a slow and methodical winding down of the correction, the pivot, this small doji-like red candle, and then the color change from red to green, and the fact that the last three candles have no lower wick. In terms of our upside target, because the decline itself began at around $1,970 down to these lows, this is where major resistance occurs, which is about $1,920. So I've created a short-term fib retracement from this high down to these recent lows. 50% comes in just below 1,900. That is our first target, to $1,913. Traders, maintain your current long position, and your stop should have been raised to approximately a break even. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.